This is Splice.
Welcome to Splice Pink. I'm Alan. Pink is where we have quick conversations with people around the globe around what's going on in the media ecosystem. We talk to media startup founders, tech, data. We also talk to product managers, academics, and of course, funders and donors. Today, we're speaking with Mohamed Nanabhay. He's Deputy CEO at Media Development Investment Fund. MDIF recently launched MDIF Ventures to invest $1 million in emerging media startups. And it's not totally new. This builds on a previous program that MDIF ran back in 2012 to 2015. Thanks for joining us here, Mohamed.
Nice to be with you.
So, what prompted MDIF to come back into the media startup investment space? I know you've always done big investments, but this is once again back to the old school of doing micro investments, right?
So, we've always done equity investments in media. I mean, we go back to, Malaysia Kini, where it was the early 2000s, where we did an early investment into the company. So, it's been part of our DNA for a long time. When we did Digital News Ventures, the fund that you mentioned, it was a very deliberate attempt by ourselves, even though we were doing equity, but to really look at what some of the changes in the landscape were, and to use the fund as both a learning for ourselves, but also, to be able to look at how we could take those learnings and share them with some of our existing clients. Since that fund, it was quite successful. We seeded companies out of that fund, such as Scroll in India, Katadata in Indonesia. So companies that have become really important players in the independent media ecosystem. Since then, we've done other types of startup investing. In South Africa, we run a program called the South African Media Innovation Program, where we work with early stage companies as well, help them along in the start with grants. And then with some of them, as they find product market fit, we'll do follow-on investments in them. So, this is really just the next step on the journey. And conceptualizing this fund, in the same way when we did Digital News Ventures, there was this shift happening in the ecosystem. And I think a similar shift is taking place at the moment. We've learned a lot coming out of the pandemic, but also I think by the time we get from 2010 to 2020, we've seen shifts in tools, we've seen shifts in distribution and so on. So it's really an exciting time to be starting a new media company. And this fund is there to support.
Right. I was going to say that with the first fund, I mean, that was 2012. That was a long time ago with a very different environment, right? And of course, now we're in a pandemic phase of well, not just media, but society as a whole. But what have you learned from running the first fund that informed the way you structured this latest one?
So, I think what was really interesting about the first fund, because it was structured as a sort of early stage angel fund where, we wrote a number of checks for companies starting out. So there were a couple of lessons which I think are interesting for media investors. So the first is, it typically followed what you'd see in a normal startup fund or venture fund, where, you're not expecting to have the full cohort to be successful. Of course, you want them to be as an investor. When you go on and you start investing, you want everybody you back to be successful. But some companies will fail. They just won't get that product market fit. But the funding allows them to try. You get some companies that sort of amble along, might not return a lot of capital, but, still do important work. And you get a couple of companies that will see growth, and they need follow-on funding and investing. So by being able to cut those early checks, you can make those bets on those founders, give them the space to try. So typically following what happens in a normal VC fund. But we also saw that then there's a need for following investment, right? So you can't just cut that first check and walk away. There needs to be money that comes in. One of the things that came out of that fund was we were able to deploy larger pools of money that MDIF had to invest into some of those companies, and grow with them and help them along that journey.
What I've always admired about MDIF is that you take a very long view in this space. A VC would give you a 5-year runway to get things moving, but you guys do take a much longer view on this.
Yeah, I mean, and that's really why MGF exists. We are patient capital and we are impact capital. We first and foremost do what we do because we believe that media companies and journalism has an important role to play in the world. So our existence is really to support those publishers, those editors, to be able to do the news and do the reporting and journalism that they need to do. And you can't take a short-term view on that.
Hmm.
We've been doing this for 25 years, and it needs to. It's critical for the fabric of our democracies and the countries we'd like to operate in and the world we'd like to see.
How would a fund like this gauge success? Because it takes a long time for you to not just return the capital, but also to see the impact that you're looking for.
As much as we are a non-profit impact investor, we still focus on financial metrics as well. So we come back and assess what's the return on invested capital in the fund over time. So we're constantly looking at those numbers, but we also report impact metrics quite heavily as MDIF. So we put out an impact report every year. We try to map what's our impact on our clients. So have we helped them grow their businesses, grow distribution, grow sales, but also what the impact of our clients are in the world. What sort of reporting have they done? Have they reported on corruption? What sort of investigative journalism has been done? So really taking a holistic view to impact.
$1 million doesn't seem like very much to go around for 12 companies as you say you would support. How did you arrive at that number, and why not try to build something as large as say a $10 million fund instead?
Sure. So obviously this isn't the only fund that we have as MGIF. We've got around $100 million under management across the various funds that we operate. This fund has a specific focus. So looking at the types of companies we expect to look at and the experimentation we want to support, it seemed like the right number. And this is annually, right? So we're starting it this year. Potentially we look at deploying further money over time. But this allows us to cut those 10 to 12 checks of various sizes. So we don't expect that all companies would require the same size of investment. We obviously operate in different geographies, and a $25, $50, $100,000 goes different amount of gives you a different amount of runway depending on where you are. And of course, part of this as well is we hope to attract other investors into the ecosystem, or at least support them. So if somebody is raising a round, we'd happily join the round. Hopefully by having MGIF as a media investor gives confidence to other investors who perhaps, are thinking about media, might not have invested in the past, but they'd feel more comfortable having somebody who's done it before.
Yeah, can you talk a little bit about that? I think that's really interesting, right? For a heavyweight like MDIF to be there to kind of show the way to other investors. Um, can you describe what that space looks like for anyone who's not invested in media before? I mean, you obviously work with a number of partners and investors around the world. You know exactly where their concerns are and their hopes for this space. What is that like? That's something that I guess a lot of us don't ever see.
Yeah, so it's interesting. You've got your mission focused investors, so people who want to have an impact. And what happens typically in the media space is, you'd have an investor like us that looks globally and looks at but often in many countries there might be investors who are concerned with their country or their region, and they might want to invest because they see the value of independent media. You can see what it means, in the fight against corruption, in terms of better governance, and so on. So having an investor who can help them look at a deal and say, well, this is a company that has a good chance of success, is moving in the right direction, is reassuring to an investor who is just dipping their feet into media. And I think it's great to have those local investors on board. It shows confidence in the company, but also it brings other people along for the journey. And often, by them investing, they see what's going on in the market. They know what that media company is doing, its impact on the ground. So it's really, we've seen this play out in some of our earlier investments, where sometimes just opening that door and allowing the entrepreneur to go on and say, we've got a professional media investor. They've looked at the business, they're happy to invest. We can arrange a conversation with them, and you can piggyback on their due diligence. is super helpful to the entrepreneur in doing that. If not at the first round of investment, because we're happy to take that risk, right? And this is part of what that fund is. We're going in, we know it's early stage, so there's a risk, but it de-risks it by having us there. And then maybe in subsequent rounds, it also allows them to bring others, investors in as well.
What would you say are some of the media spaces that are underinvested right now?
So what's interesting about a fund like this is we're looking quite broadly. So we don't have a set hypothesis on what these companies would be. Through our experience, we know what makes a good founding team. We know what type of product fit needs to happen. We know that sometimes it takes a pivot or two in order to get to that product fit. But given those parameters, we wanted to be quite wide in deploying the fund. So if you look at that fund, the announcement and the funding page, it's really written quite broadly, and that's done deliberately. We wanted to get beyond what the usual suspects might be, or the usual types of companies might be, and to say, well, there's innovation happening. We might not be seeing it. We know what makes a good founding team. We know, what the guardrails are to build this media business. But often the product, there's some 20-year-old or 30-year-old who's, seen something in a market they're operating and sees an opportunity. And we want to hear from them and be open-minded to what they want to build.
Yeah, one of the other things that Rishad and I admire so much about MDIF is just how willing you are to broaden the definition of media. So, like, one of your investments has gone into Josh Talks, which we think is an incredible, exciting, media opportunity that I think more people should be thinking about. So, when you say that what makes a good founding team and what makes a great product, what have you seen about founders and founding teams that you think are, that you look for, that tick boxes for you?
So first of all, we're very interested in somebody who comes from the editorial background, because it keeps the company on mission, right? So, one of the things we've learned from the previous fund is when we have people who, don't come from the editorial background, it's easy for the company to pivot off mission. It might make a successful company, right? Because it's, often easier to build a SaaS tool or, something in the content marketing space and be, financially successful. But stepping away from sort of that journalism mission. So having one of the founding members who comes from that background, who's committed to that space, but on the other hand, they need to have the partner, right? And the partner needs to be the product person or somebody thinking about product. A great example of this, and I always use this example, is the Malaysia Kini founding team between Stephen and Prem. Even though they both have the journalism background, Stephen's, all about editorial, running that newsroom, and Prem's super focused on building great product. And that makes a superb founding team because they check each other, but they also push each other to grow and to grow the business.
Yeah, we often look at a lot of these companies and we go, oh, not yet another founding team that's all editorial, or or some kind of someone who's got years of experience in journalism. Of course, we don't want to knock that, but we often feel like that becomes a handicap at a certain point.
Yeah, and I think people who've I spent my career in digital. I've been challenged to think about print and other types of media as I got involved in MDIF. But I think being able to constantly think about the forms of journalism, think about how we distribute content, to think about how we engage with our audiences is really important. Because unfortunately, I think one of the things we see within the media industry and the journalism industry is, while we think about big audiences, often there's a smaller audience, which is other journalists, right? And we like, talking about our own success internally. And then, we often don't see the larger market and the larger picture. So we think we're doing well, but really, there's a question of, are we doing well? Maybe we talk about our great newsletter, our great podcast, but if it's, ourselves talking about it as journalists in media, and the audience isn't paying for it or using it, there's a real question of what success means.
And speaking of which, I mean, you guys obviously take an investment stake, an ownership stake in these companies that you invest in. How do you go about figuring out what that number looks like? I'm sure it's not the same across all, potentially 12 companies? How do you make that decision?
So, with this fund specifically, because it's an early stage fund, we're using tools that would, make doing these investments founder friendly and easy to do. So, in cases where it's a startup, there's no revenue, or it's very early in the revenue journey, we'd look at doing safes or convertible notes so we can delay valuation until the company's grown. In some cases, there might be a round that's valued, so we'd be happy to go in there. So we're approaching it in a flexible manner, where we don't feel constrained by saying, well, we have to value everything. Just knowing it's early stage. Of course, if you're coming to MDIF for a lot of money and a larger check, it's going to be a different process and more rigorous, depending on the stake we're taking.
So one question we'd like to ask our guests is, I mean, you're very familiar with the work that Splice does. Our goal is to help support the media startup ecosystem around us. What do you think we can do more to be a stronger ally for a founding team, for example?
No, so I think the work that Splice does is critical to the ecosystem. You see it, because I think there's a lot of things that we see in developed markets, which are great, but perhaps don't translate directly into emerging markets and other parts of the world. And I think Splice really plays a role in connecting those dots. So and vice versa, right? Also taking things we're seeing in other markets that might not be in play in the US and showing why they're important. And what I like that Splice has done, and I'd like to see it continue, is playing this convening role where it can bring people who are building companies, building product, give them a platform, but also let them share both the success, but often more importantly, the failure and the learnings.
I know we like those types of stories, and that's why we're hoping to do more of these types of podcast episodes. I think all these new formats have been really quite powerful and interesting. So thank you for your time, Mohamed. That was Mohamed Nanabhay, Deputy CEO at MDIF. That's a wrap for this episode of Splice Pink. If you like this podcast and want more, please subscribe. Better yet, share this with someone else. And get in touch. We're on splicemedia.com, and we'll catch you in the next one.